All right, team, we are back with the Ask Matty show today. We are going to have an amazing show today. Matt, I'm super excited. The people left some good questions, some good hot takes that we are going to get into today, asking about some Hbar charting. We saw a little bit of correction on Hbar. This guy thinks, we went back down to the all-time lows, and he's wrong. So we're gonna have to get into what the strategy looks like with Hbar buying today. Also, someone's asking about 3 projects that you mentioned previously. They want some clarification on that. Does centralization even matter? Or maybe he was asking decentralization. We'll get into that later. Taking profits and Casper exchange listing. This is the Ask Matty show. Matty, before we get into the content today, I think it's very important we discuss what we have going on at Crypto Charge. Can you break that down for us?
Yeah, guys, Crypto Charge is an educational platform. So we go live Monday through Friday, covering the charts for you guys. Every Tuesday, my partner, Dan Habib, gives you guys a fantastic macro breakdown. He's been doing this for just about a decade now. It's really, really great information. I don't think that you guys get anywhere else with this type of program. We have our coin library. We have entries, exits, and technical analysis that's updated regularly. Even in the description there, we kind of tell you what each things are and why each level is important. So there's a lot of great detail in there for you guys to look at. And of course, Discord community, guys, right? Like that's so important for you guys to have ability to ask questions, interact with the community, get real-time updates. All of that comes at $49 a month or $49.99 for the year, plus a 30-day free trial if you guys use code YouTube at checkout. So you guys have nothing to lose. You got 30 whole days to check it out, see if we're full of it, right? Or see if the program is good for you. But you have to use code YouTube to get that, all those benefits that I just mentioned in a 30-day free trial.
Awesome, Matty. All right, let's get into the things for today. Doug McGrath says, Hbar dropped a lot. Man, it looks like a really good guy right now. I think he meant goodbye, okay? Would you buy?
To the charts. So let's go ahead and take a look here at Hbar, guys. So, and this is something you guys, if right now, if you wanted to, you could go look in the coin library. And this is actually a level that I explicitly pointed to here on Hbar. So as always, guys, zoom out. If you guys are trying to figure out what's a good entry and you guys are not looking at all the price history, you're not doing a top-down analysis, meaning you're starting from the highest piece of price action. And then after you've kind of identified some levels, drilling down and maybe looking to kind of, fine-tuning your entry a little bit. What you guys know that I, kind of hold is like, the king of technical analysis is support and resistance. So of course, identifying trend, uptrend or downtrend first is most important. But then after that, support and resistance is like the next foundational layer. And then everything else kind of like falls in importance after that. One of the things I look for when we see an uptrend, right? So we see a breakout, we see some nice impulses to the upside, is when you break over a previous high. And we're talking about like on a daily level, weekly level, something macro. That high should be retested at some point as a higher low. It's an imbalance that got left behind. We're not going to get deeply into maker market theory right now, but there's essentially an imbalance to get left behind. So when I look at the Hbar chart here and I see that there was this top over here from, and again, there's imbalances lower, but this was my minimum requirement here on Hbar, was this wick here from April on the Hbar chart on the aggregated crypto chart here. We had this big, huge breakout over here in November. You guys remember that? We had a huge flagging structure in here, but we didn't really do any sort of back testing in there. Huge wick on that capitulation news, with the tariffs and, kind of just the markets overreacting on the weekends, and we saw all that happen. Nonetheless, though, what you ended up getting was a breakout back test into that wick there. Now, if we also look a little bit further left, we can see that this level is also important to the market because this was support that was built here from May of 21 through March of 22 before you see that capitulation. So again, what you saw here was an imbalance because you saw selling in here with no buying opportunities, accumulation range that lasted hundreds and hundreds of days, and then you finally get a little bit of a break of that area and then a back test. So 18 cents was the most shallow area I would have recommended somebody gets involved in Hbar, but really the better area to back test would have been down in the here we had more of a topping structure, kind of around like the 9 to 12 cent region, but that was the back test. Now that Hbar is back at 25 cents, that's not so much a great entry anymore, right? Because if I go ahead and bring my Fibonacci into this, and again, someone's going to tell me that my price targets are too shallow, that's fine. I don't care. Just showing you guys what the fibs say. When you look at current market up into that 1.618, it's about a 2.5, 2.6x, and then maybe upwards of like an 8x into that full extension. So it's again not terrible risk to reward, but when you look at structure, you'd really want to maybe be patient, set a limit down to 18 cents again, see if that gets filled. But I would not be chasing price at current market now that we've rebounded so heavily off of that zone.
Sophie Mac 2489 says, really appreciated all the information. Thank you so much. I've been wondering a lot of these things and it was super helpful. Curious which 3 other projects Matty was referring to that he's currently tracking.
I'm gonna guess you're referring to like what I'm DCAing into because I generally run like a 3 or 4 part DCA. Right now I'm DCAing just 3 assets, and that's gonna be HNT, Casper, and API 3. I'm actually considering shifting a little bit more into API 3 and pulling a little bit from maybe Casper for the short term, just because again my personal averages and what I've been working on and kind of what we've seen with recent price action here. But those are 3 projects that I think really, really are fantastic risk to reward ratio. And also there's just like really good like vertical diversification. So if you guys are new to crypto, you're trying to build a portfolio, Casper for smart contracts, upgradable smart contracts, small capitalization crypto, HNT for decentralized cellular networks, and then API 3 for, small cap oracles. So addresses different verticals, all relatively smaller cap. H&T is now under $1 billion, so I would consider that like a smaller cap compared to some of the other assets that we have out there. So those are 3 that you could definitely consider looking into, researching, and kind of looking at the charts to see if those make sense for you.
Maddie, you just talked about API 3, and API 3 just set new lows. Are you looking at that crypto as being one of the best risk to reward cryptos on your watch list right now?
Yeah, it definitely is. I slightly adjusted our Fibonacci to accommodate the new low, and we're kind of just chopping around in the whole market right now. I think that we're going to continue to see a little chop. When you get those kinds of wigs, you're going to get a lot of chop, but it is offering incredibly great risk to reward ratio. It's under $100 million market cap right now. When we saw Casper kind of start to deviate underneath that 100 million, we saw a lot of demand step in and a lot of volume step in. So I think we could see something similar with API 3. You guys are looking for those small cap gems, and like it doesn't need to be the one that's at 1 or 2 or 3 million dollars. Like under 100 million is really a big gift, for most assets, especially if there's like a good quality asset. I'm not saying that go find the meme coins that are under 100 million, but if you have assets that have good fundamentals that are heavily integrated, API 3 is integrated in tons of exchanges and stuff, guys. It's not like, hey, we're going to do something great in the future. Like they are providing, first party data feeds right now today. So I'm betting on something that has real utility, small cap, and also the staking rewards. I know some of you guys don't want to deal with the 7 days in, 7 days out and pay the ETH fees, but it's really aggressive APY, and I'm happy to earn those long-term rewards for a future cycle. So API 3 has a lot of facets to it that can make it a great both short-term and long-term trade.
Tracy Shu, too, says, why does the centralization even matter?
I'm not a person, I guess, that is like hyper concerned with centralization. I think that really maybe this spawned more off a conversation we were having about the centralization of Bitcoin mining as a whole. It is really more just to point to like, I think that we should always be evaluating the absolute best technology available, regardless of there being a centralized factor or not. As time goes on, you're not going to see developers and teams who want to essentially give away 99.9% of tokens, for free and do all this work and development and not reap some sort of reward, right? And to some extent, that creates a little bit of a centralized factor. I'm not afraid of centralized factors, and I think that a lot of people in this space want to have a competition of who's the most decentralized and that creates the most valuable tech. And I don't think so. I'm a person who definitely is a decentralization enthusiast, and I love to see a decentralization. And even when we look at the ability to transact without a centralized entity, that's still, in my opinion, is a very high level of decentralization compared to a lot of the other assets we have out there. So the fact that you're able to, utilize a cold storage wallet and send all of these assets to anyone you like without having to ask permission from a third-party intermediary or a bank is a huge step in the right direction for decentralization. But when it comes to projects themselves, we are going to see more and more projects have more centralization, and that's just a fact I'm willing to accept, and it's not going to scare me away from investing in the space.
Maddie, when I hear people argue about this, they usually go to some philosophical elements of Bitcoin being, anti-government and not being controlled by a single point of authority and, having counterparty risk. And so when people look at our cryptos, they see those things. They happen to see those things. Do you hold like a middle ground of these two positions, or are you leaning one more way or the other?
I would say I have like a fairly like reasonable middle ground, like as
Mm.
from like my personal belief system, as somebody who believes in like sovereignty and like individual rights and the right to do whatever you want with any assets and property you have. I definitely hold sovereignty and decentralization as like a very high like pedestal like in my life, regardless of crypto in itself. But again, like I'm an investor and I'm also a tech enthusiast, and I understand that you can't always have the purity of decentralization as the forefront of progress. You need to have a little bit of balance there, and I'm willing to give up some of the decentralization for progress.
Joss, maybe? I don't know, man. So the market rebounds and next it tanks again. I'm learning to take profits at 4x, wait for the dip, then buy back in. Not good for capital gains, but hodl does not seem to work in this market. Thoughts?
So everyone's trading strategy is going to be based on a variety of things, right? Like I don't know like how much money you have to invest. I don't know if you're able to add to the market on a regular basis. For some people, they don't have money to add to the market on a regular basis. They're not able to follow my consistent investor strategy. So they have a lump sum to invest, which is not a bad thing, right? Like we never want you guys to deviate beyond what you're actually comfortable investing in the market. But it does create a different element because you have like a very binary amount of money that you want to work with. So when you do see those dips, right, and you are trying to like huddle through them and you're not able to add on those higher lows or on market corrections, you do obviously get a little bit of an emotional reaction to that. So again, this is always going to be dependent on kind of like how you are approaching the markets. Now, can you do some swing trades and take profits at areas of interest that you see after you've garnered a nice move, or hey, we've done a 2 or 3x. I'm going to take my initial investment out. I'm going to let some more ride. That's all perfectly okay. That is good risk management as long as it's a planned form of risk management, right? Like we don't want to like look at the dollar amount and be like, all right, boom, I'm taking this, right? Like we want to still have a calculated plan. So if you're a person that has limited, funds to invest, or you can't add to your portfolio on a regular basis, maybe you do want to be a little bit more aggressive and do more shorter term trades. Now with those shorter term trades, you still can lose trades or lose money in those situations, where sometimes position yourself where you think that you've taken, a good chunk at the top there. But really, if you were to zoom out to a more macro level, that was really just like the very small area of resistance. And there was other larger areas of resistance and you're leaving money on the table in that extent. So, if you want to go with that approach, you can go ahead and get after it. Like you did mention here, there is a capital gains factor for short-term capital gains. When you hold things for less than 12 months, you pay a higher tax rate, at least here in America for that. Outside of the US, there's obviously different tax obligations, but that's one of the things to consider. So I'm a cycle trader. I've done a lot of different kinds of trading. I do some swing trades. Once in a while, when the markets are hot, I'll do some leverage trading. But the majority of my investing and trading is from cycle trading because it removes a lot of stress. It allows me to have maximum ability to like have more flexibility with my overall like exit plan. So again, it's all based on your like personal situation.
Maddie, I haven't heard your opinion on this, and you may have talked about this in the past, but I just wanted to clarify this because I have heard some strategies as it relates to exit plans, and I heard someone phrase it like the goal of being to get all back into stables, or a majority back into stables, as we would say, because some positions we want to hold and small positions. And so as the cycle goes on, and this gets inspiration because this guy talks about forex, sell, wait for a dip, buy back in, right? And that's cool in theory, but at some point that's no longer attainable as, the market starts gets, pico top, gets toppy, and you're not able to, capitalize on those moves, and then we start, descending into a bear market, right? And so I wanted to ask you, do you see the exit plan as like, taking profits, entering into stables, and taking a portion of that and bringing it back into some altcoins? Is this kind of like just from cryptos to your XRPs, your Caspers, your Bitcoins, and then moving that over to a USDC by the end of the market, where your USDC bag is getting bigger and bigger and bigger, and your altcoin bag is getting smaller and smaller and smaller, where it's this transition over time where you're kind of hacking some off to go re-enter in the market, capitalize on the moves? Do you see that, or is it kind of like, all right, take profits, way back in the low, and then swing it all back in again?
No, we definitely want to protect capital when we've done an exit, right? That's very important, especially because we've done a good job managing risk on the way in, DCA, and being particular about where we want to enter. We have multi-step exit. We want to make sure when we take those profits that we're being very respectful of those profits and we're protecting that capital that we've worked very hard for, right? Because it's easy when you see that money and you're like, oh, whatever, I made 100K on this. Let's double it. I can easily make an easy 2x, right? So as you kind of start to see that deviation or that transition from being risk on to essentially risk off, being stabled in, when you do look for opportunities, because obviously if we're taking a lot of profits and we're exiting a lot of our position, what does that mean? That means that we're kind of getting to the expectations of where we thought the market might top out. So if we decide that we want to take additional plays in the market at that point, we can't treat it the same way of like, I'm just going to reopen a brand new position, spot position, no stop loss. In those situations for me, what I'm going to be looking for is small trade ideas where I have binary stop losses, where it's like, okay, if the trade moves against me at this much, I'm out and I'm taking this calculated loss. I'm also, again, not risking the entire profit that I just put into it, at that price. And I'm going to be looking for smaller trades, like 20, 30, 50% wins. If I start to see that I'm losing those trades and like, their uptrend is not so much intact anymore, stop, let the market breathe out, prove to me that it's a downtrend, flip positions and start to do some leverage trading to the downside. But again, with risk management, with stop losses, with a reasonable amount of leverage. So again, my strategy is a little bit different than a lot of other people. Some people don't have the ability or the skill set to be able to do that charting, to be able to like set the parameters properly for themselves, where they understand like where they're actually just like leaving an unnecessary amount of risk on the table. But for me, when I'm exiting those cycle trades, protecting capital, any trades that I do take after that have to be protected by stop loss, take profit entry situation.
Got it. So you're transitioning from a cycle trader to a swing trader in this instance, right?
That's right.
Skark, Whale, I don't understand why Casper isn't listed on any tier 1 exchanges. Any thoughts why it hasn't happened yet, and or will it happen this bull run? Or could it pump this year to the extent everyone is hoping for without any listing on the big exchanges?
Now, this has been a big topic with Casper community, and it's something that we've been really vocal about. And again, first of all, guys, I think that we have a fantastic community over these last few months. I think that a lot of people who actually want to be here, who care about the project, have been paying close attention. We're watching the roadmap. We know that Casper 2.0 is out next month in March. It is feature complete, so it's ready to go. But the implementation will be next month. There's a lot of exciting DeFi applications potentially coming to Casper. We have a lot of mechanisms already in place that are going to allow more DeFi projects to come onto Casper. So if we look at just from a growth standpoint, I think that there is a lot of potential for Casper long term, right? When we talk about tier 1 exchanges, though, so let's also be very particular. I know we just say T1 like kind of generically, and again, I know a lot of our audiences here in America. Not all of our audiences in America, right? Like we have a lot of people that YouTube, Twitter, and even in crypto charge that live in the UK, in Europe, in Australia, right? And they have a completely different set of available exchanges to them. So when we refer to T1, we're generally talking about Coinbase and Kraken, right? Like those are kind of like the two big ones. Maybe you're considering Binance US, but like that's pretty much dwarfed at this point. So Kraken and Coinbase being the main two. But when you look at global exchanges, like KuCoin, for example, is one of the top global exchanges, and they have Casper listed. MEXC has Casper listed. Crypto.com actually has Casper. So there are options to purchase Casper outside the US as well as in the US. And some of those exchanges are considered, I would say, like tier 1 exchanges. Like if I had the option to trade US-based KuCoin style trading, right? Like to me, that's actually a true T1 exchange, and Coinbase would be like a tier 2 exchange because it's not a full service brokerage because they don't offer like perpetual contracts with leverage. So, I think that when we do get that listing, it is probably going to bring a lot of excitement to the community. It's going to increase access. We also did a big push the other day on Twitter, and Michael Stoyer actually, tagged everyone from Kraken, and he said they're in direct contact with the individuals that are responsible for helping list new assets over on Kraken. So we are pushing for it, right? We're working towards that as a community. We're not being quiet about it. We know that it is going to help along the overall like just exposure and awareness of Casper as a whole. But I've also seen lots of assets that had zero T1 listings and have done 100x's. Doge being actually a great example of that. Did not have a tier 1 listing during its massive pump. It wasn't until pretty much after most of the price action had been done that you got that tier 1 listing. So I know that it's an important factor to us, but don't let that be the thing that holds you back from making the investment when you know that you have other liquid marketplaces. You guys also do have the opportunity to work with Caleb and Brown. Now it is the 3.5% fee across the board, but you get assigned a broker that you can work with. They can break up your trade over multiple trades if that ends up being like, a liquidity issue, and like they can reach out to multiple over-the-counter brokers and other exchanges and other order books. There are options, right? So some of you guys just want to be in one and out of one exchange, and that's fine. If you guys really care about an investment, you like the trade idea, you like all the tokenomics, you like the fact that you can earn staking rewards, and you're willing to do a little bit of work to get that executed, you can get ahead of opportunities before other people can. So I'm not saying it's an easy trade right now because you don't have as many like highly liquid sexes, but there are more than enough off ramps to make sure that you can exit your position if you want to.
Great points there, Matty. Yeah, you definitely have to attribute all of those different things when looking at a project. And the context does matter, right? If the new crypto just got launched and it's not on all the exchanges, then it's like, oh, yeah, I can understand that, right? And so for Casper, it's been around for a while. Obviously, it didn't meet that early on. The team didn't really possibly push for a Coinbase listing. Maybe they did, but it's at Coinbase's discretion whether they
Right.
list a token or not. And obviously, Coinbase was like, yeah, maybe Casper doesn't have all the hype, right? Or whatever reason they make up in their head. That's what I would assume is the reason why, because you see these meme coins get launched and, just a couple weeks later, they immediately get listed to Coinbase, right? So maybe it didn't meet that initial hype, but that doesn't mean that you shouldn't buy the project, right? We don't base our investment decisions off of, one tangible aspect like that. Okay.
Absolutely.
Yeah. All right. We're in agreement here, Matt. All right, team. Thank you for watching this show. If you got something valuable, make sure you leave a like. I think you got a lot of value here with Matty going to the charts and discussing some of the cryptos that he has been paying attention to. So, team, make sure you're entering in strategic zones. Honestly, we were discussing API 3 on Monday. I'm super excited for that opportunity right now, and a lot of cryptos are not near their all-time lows. Like Maddie was discussing, HNT not near its all-time low. Casper a little off of its all-time low. So API 3, I'm happy to see crypto right now that's at its all-time low, which doesn't mean it's going to give you better reward. It's just showing you that it's probably, if it finds a bottom, one of the safest opportunities to buy right now. And so if you have the idea that crypto market's going to turn around in the next month or two, then you should be excited about buying
Right.
API 3 right now, right? And so even like that's okay with me that I was hoping for, hey, December or January, API 3 is going to turn around and it's going to go to the moon like HBAR and XRP. It didn't. Okay. And now it's like, all right, like, well, do you believe in API 3? Yep. I'm going to hop on this opportunity. So, Maddie, I'm really excited. We're getting more opportunities. This has happened like over the last like 6, 7 months where we think we're going to get going and then we get shot in the foot. And it's like, what are
Right.
you going to do? You're going to buy. That's what you're going to do. So,
Definitely.
team, thanks for joining us today. We will see you guys next week. Bye.